Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Russian economy because it's not just me that's saying that Russia could be heading towards a major recession. The Bank of Russia has now come out and said that it's likely that Russia could go into recession at some point in the next 6 months. And the reason for this is because they've just released the latest GDP figures for the quarter ending September. And they show that GDP only grew by 0.6%. So you might be thinking, well, 0.6%, that doesn't sound too bad. But when you compare it to the previous two quarters, where Russia grew by 1.1% in Q2 and 1.4% in the first quarter of this year, that marks a material slowdown in the growth of Russia. And when you look at what's happening per month, things are getting materially worse because the latest data has just been published for oil and gas revenues for October, the period through to October, and they show that year on year, oil and gas revenues are down by 27%, and in the 10 months of 2025, they're down by 21%. And this is a major problem for Russia because it's still totally dependent on oil and gas revenues. They make up one third of GDP, half of all of Russia's revenue, and two-thirds of Russia's exports. So when you're totally exposed to a market such as this, you need the prices to be staying high. You need to get a good price per barrel for your oil to get the maximum amount of revenue and make the most amount of profit. But unfortunately, from Russia's point of view, that's not happening in the market right now. If we have a look at this chart, which shows the movement in Brent crude oil prices over the past 5 years, you can see that we've got a significant downward trend here. There was a spike in prices in 2022 following Russia's invasion of Ukraine because that obviously caused global panic in the oil markets. Nobody really knew what was going to happen. And Russia at that point was an important supplier of oil into the global market. And you can see that prices actually spiked at $120 per barrel, which was basically around 3 times what they've been trading in 2021. Now, obviously, 2021 was affected by the COVID-19 pandemic. So we saw a huge reduction in oil demand because nobody was allowed to leave their house. We were all at home watching the telly, playing games on Zoom with all of our family. But following that initial spike, we then saw the global market starting to stabilize. Prices came back down to a more normalized level, which was sitting at around about $80 or $90 for a while. But over the last 3 years, that has come down significantly. And you can see that currently the price is sitting at around $63. Now, the reason why I'm talking about Brent crude oil and not WTI, which is West Texas Intermediate, is that WTI is basically the benchmark price in the USA. But Brent crude is closer to the global price. So $63 is, broadly speaking, what you'd need to pay for a barrel of oil if you were buying it in the global markets right now. But not if you're buying Russian oil, because Russian oil consistently trades at a discount. And the reason why it trades at a discount is because you need to encourage people to take the risk, because there is a genuine risk now. If you're caught buying Russian oil and it's either above the agreed price cap, and the price cap is now set at around about 15% below the market price. So if we're talking about a price of around about $60, you shouldn't really be paying more than about $50 for Urals oil. And if we look at what's happened to Urals oil prices over the past 5 years, you can see it follows a very similar trend to what we just looked at for Brent crude, but the levels are lower. So the spike period that we saw following Russia's invasion of Ukraine is less than $100 compared to $120 for Brent crude. And over the last 5 years, it's come down to the current level, which is sitting at around 56. Now, that's obviously above where the official price cap would allow you to buy oil. So some countries are still paying more than the price cap if they can get away with it, if they're buying it from the grey fleet, the shadow fleet, whatever you want to call it. Also, some of the pipeline oil that's going to China from Russia is more difficult to monitor. So that's what's been happening with Urals oil prices. And if you think about this in the context of a company, if you're a company and the price of your products is doing this, if it's going down constantly, then that makes it more difficult to make profit because you're constantly having to work with reducing your costs and trying to do things to combat the falling price. And that's what Russia is facing in terms of the global oil markets. So, unfortunately, from Russia's point of view, there's not much you can do about global oil prices. They're global, they are set by supply and demand. So, Russia can't suddenly start increasing the price of its oil to $100 per barrel because nobody would buy it. You want to buy oil at the lowest possible price. Now, interestingly, when we're looking at the price being $56 here, in the Russian budget for 2026, they've set a price originally of $70 per barrel on average. Now, clearly, $56 is way below 70. So the budget had a massive deficit in it. So even if Russia had achieved $70 per barrel and all of the volumes of sales, it wouldn't have been able to pay for everything it was needing to pay out for. However, at $56, things are going to get much, much worse because we've got a huge deficit against the original budget. It's already looking worse. But then when you layer on top the fact that Russia is now facing a huge amount of sanctions as a result of the fact that both of its biggest oil companies, Rosneft and Lukoil, have been sanctioned directly now. So nobody can buy oil directly from those two entities without running the risk of being hit with secondary sanctions. So it's actually going to get worse before it gets a lot better. And the price of oil is intrinsically linked to what's happening in the Russian economy. This table shows all of Russia's recessions since the breakup of the Soviet Union back in 1991, so when Russia became an independent country. And you can see that it actually went straight into recession in 91, and that recession lasted for 5 years, and we saw a cumulative 36% fall in Russia's GDP. Now, that was partly because Russia was trying to cope with being an independent entity, but there was also an impact in terms of falling oil prices. So Russia was in a complete mess back in those days. It got itself out of recession at the end of 96 and stayed out of recession until 1998. But unfortunately, at that time, oil prices fell to $11 per barrel. Now, that sounds ludicrous today, doesn't it? Imagine oil being at $11 per barrel. You can't really think that it would go anywhere near those levels. But the reason it's at 60 at the moment is because that's where supply and demand has put it. But what we have right now is that we've got OPEC Plus increasing the supply. We've got lots of other countries like the USA, Brazil, Argentina increasing their supplies, and demand's going down. So prices will continue to fall below the current levels of $60. It could get to 50, it could get to 40, it could get to 30. Could it get to 11? I don't know, maybe, but it has been at 11 at some point over the past 30 years. And that's not good news if you're dependent on oil prices, because all it means is that you're getting less revenue for what you're selling, and therefore you can't cover the cost of all of your expenditure. Russia came back out of recession after 98, stayed out for 10 years, and then went back into recession along with the rest of the world when the global financial crisis struck in 2008-2009. And at that point, we saw oil falling from a high of $147 per barrel, right at the peak of when the markets were booming, down to $35 per barrel. That is a dramatic reduction. And when you think that the peak during Russia's invasion of Ukraine was around 120, could the price go down to $35? Well, yeah, absolutely, it could. If we see a global recession kicking in, if we do see a continuation of the slowdown that's happening right now. Russia came back out of recession after the global financial crisis and stayed out until 2014, when it decided that it was going to invade Crimea and occupy it, and it's still occupying it today. As a result of that, sanctions were applied against Russia, and we also saw oil prices coming down. The combination of those two factors forced Russia back into recession. We saw the ruble falling by 50% and inflation rose to 15%. So problems started to occur in the Russian economy after the invasion of Crimea. Russia managed to get itself out of recession, but went back in 2022 following the full invasion of Ukraine, when more sanctions were applied against Russia. So that was particularly just focused on Russia. It wasn't really anything to do with the oil price. This was things like being excluded from global payments markets, not being able to trade with Europe, all of those sorts of things. It then pulled itself back out of recession by converting to a wartime economy and basically sponsoring lots of companies in Russia to support the war in Ukraine. And that's the current situation. That's still going on right now. So that boosted GDP growth. But as we've talked about a lot on the channel, that wasn't really for the long-term benefit of the Russian economy. It was actually making Russia structurally weak because it's now dependent on the Kremlin paying all of these companies. They're not actually selling anything to anybody. They're not growing their long-term prospects and basically building for a healthy economy. They're just using government cash to pay their workers to produce things that have got no long-term value. So that's not a great situation to put your economy into. And in 2025, we've now got a situation where Russia is most likely going into recession once we see the Q4 and Q1 figures for 2026. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about what's been happening in the Russian economy, and we've seen the direct impact of the ramping up of the sanctions over the past couple of months. But actually, the figures that we've talked about in today's video don't actually show the impact of that increase in the sanctions. We are looking at figures for the quarter ending September, so July, August, and September. So we hadn't actually seen that happening back then. That was when President Trump was still hoping to get President Putin to agree to a ceasefire. But in those figures, we have seen a significant slowdown in GDP. It only grew by 0.6%, which is basically around half of the growth that was seen in the second quarter and less than half in the first quarter. So there's a significant slowdown going on right now in Russia before the impact of these sanctions. And one of the reasons for that is because oil prices are going down. And if your main source of revenue is coming from one product, if this was a company and you were selling widgets and the price of widgets kept going down, that would be a major problem for you because you've got your cost base, you've got all your people, your rent, all your power and all the rest of it, all the things you've got to spend to make those widgets. You can't change all of your costs. But if your price is going down, it's biting into your profit margin because you're constantly having to sell for a lower price. You're paying all of your people and all of your expenses. And so the bottom line gets hurt and you can actually move into a loss-making situation very quickly in a falling market. And that's the situation that Russia finds itself in. Its main product is oil and gas. The price of oil and gas is continuing to go down. It's got a very high fixed cost base because it's spending lots of money on various things, including the war in Ukraine. And so there's nothing it can do about it because it's a global market. You can't suddenly say Russian oil is better than everybody else's oil, so therefore we will sell it for $30 a barrel more than everybody else because nobody would want to buy it. And of course, combined with the falling prices, we've also got falling demand as a result of the ramping up of the sanctions. Recently, Rosneft and Lukoil were hit with direct sanctions, so nobody wants to deal with those two companies, and they are the biggest exporters for Russia. So Russia is really struggling right now, and we've seen that the main state buyers from China have pulled back on Russian purchases, as has India and Turkey. So its three biggest customers are now turning their back on Russia. And this is coming at a time when the global supply of oil is increasing. I talked about this in a recent video, but it's now being projected that in 2026, there will be an oversupply of oil. So all the oil being put into the markets will be more than demand is growing. And simple economics tells us that when supply outstrips demand, then prices go down because you have to find the lowest common denominator to try and get rid of as much oil as possible. But even at that point, even as prices go down, it's unlikely that all of that oil will be used up because we are seeing the global economy slowing down at the moment. Most economies are having to reforecast what they think their GDP growth will be. And of course, the USA and China are on that list, and they're the two biggest economies. And so when they slow down, everybody else by definition also slows down because if you're selling things to both of those economies, you'll sell less of them. And combined with that, we've also got Donald Trump's tariffs, which are increasing the price of anything that's being exported into the USA. So that's going to impact on lots of different countries and companies as well. So when you look at the combination of factors right now, we've got falling oil prices, we've got an increase in global sanctions against Russia. We've also got a slowdown in the global economy. All of that tells us that it's going to be a challenging period for lots of different countries, but particularly for Russia, because they're facing really big problems because they can't get as much revenue as they got historically. Firstly, because the prices are going down, and secondly, their buyers don't want to buy Russian oil. They can buy from elsewhere. At the start of the war in Ukraine, there were concerns that if the sanctions were applied too heavily against Russia, it would cause a global recession because we needed Russian oil to keep the global markets balanced. But now we've got an imbalance in global markets. There is more oil than everybody needs. And so this is the time that everybody can increase the sanctions against Russia without damaging the rest of the global economy. And what we're seeing is Russia is now really suffering. The figures back that up. We saw that it's down 27% oil and gas revenues in the period to October and 21% in the first 10 months of 2025. It's likely that those falls are going to accelerate, that it's going to get worse because buyers don't want to buy Russian oil and prices are continuing to go down. So all of this spells really bad news for Russia, and it's very likely that Russia will go into recession in the first part of 2026. To have an official recession, you need to have 2 consecutive quarters of falling GDP. Now, they don't have falling GDP at the moment. They're still achieving growth in the third quarter. But if the trend continues as it is right now through to the end of December, it's very likely that GDP will contract in the final quarter of 25, and that's likely to continue in the first quarter of 26. So by the end of the first quarter of 26, Russia is very likely to be in recession. And I don't know when it's going to come out of that recession because when you look at all of the indicators, they are getting worse. It's likely that Russia will see less demand for its oil and the price of its oil will continue going down. And its expenditure is continuing to go up. And Russia is also sponsoring all of these companies because of the war economy. It's using the National Wealth Fund to pay all of those companies. That National Wealth Fund will run out at some point because it's already down to around $35 billion. That's not enough to keep everything funded. And so Russia will have to start issuing debt. And the big question is, who's going to buy that debt? I covered this in a recent video. Russia's looking at issuing yuan-denominated bonds, so denominated in China's currency rather than in rubles, because nobody wants to buy anything in rubles. And the big question is, will China want to buy those bonds? Or will Russia just have to sell it to itself? And this becomes a real big implosion at some point. If you're just constantly using your own funding, then it just doesn't work once you run out of cash. So hopefully you've enjoyed today's video. You found it useful, informative, and most importantly, thought-provoking. If you've liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. I know most people watching these videos are not subscribers, so please hit that red button. Thank you to everyone that's supported me. If you've bought me a coffee or sent me YouTube super thanks, really appreciate that support. Thank you so much. And if you've signed up as a long-term supporter through Patreon, YouTube membership, or Buy Me a Coffee membership, I genuinely appreciate that. It really helps to keep me motivated. And here's something to put a smile on your face.